I still think it's going to be a few years. I don't think we're going to see $100 silver, in the next 6 months, or at least I hope we don't. If we did, that could be an issue. But it has been a slow process. If you compare this move to what I just mentioned, 09 to 2011, that was a very spiky. 2010, silver went straight up, and then it obviously peaked in early 2011. But this move has been more sustainable. You've got fundamental buyers coming into the market. This is not a short cover rally. This is a real solid bull market, and the move's quite different.
KeithNeumeyer has long argued that silver remains the most undervalued asset in the entire commodities complex, and his conviction is stronger than ever. He believes the manipulation in the paper markets has reached its breaking point, as the gap between physical and futures prices can no longer be sustained. Industrial demand from solar, electric vehicles, and military technology continues to rise, yet global production is stagnating. Neumeyer warns that once the dam breaks and physical shortages become undeniable, the revaluation could be violent, pushing silver toward and potentially beyond the $100 mark. He points out that silver's dual role as both an industrial metal and a store of value gives it a unique advantage in the new economic era taking shape. While monetary policy, debt, and inflation drive investors towards safe haven assets, the green energy revolution is quietly draining physical supply. This combination, Neumeyer explains, creates a perfect storm that even bullion banks will be unable to contain once confidence in the paper system erodes. The underlying message is clear: physical silver ownership may soon become a privilege, not a choice. In his view, silver's eventual breakout will not be a speculative bubble, but a repricing event reflecting decades of suppressed value. He stresses that investors who understand the mechanics of this market have a narrow window to act before the crowd catches on. When that happens, silver's move from $30 to $100 could unfold far faster than most anticipate. As he puts it, the greatest wealth transfer in modern history will reward those who hold real metal, not paper promises. Before we dive into experts' sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Well, it's quite different than the move that took place back in 2011. If you probably remember, silver was in April of 2009. Silver was about $21, $22, and then by November 2009, silver dipped almost to $9. It got down to the low nines, which is pretty surprising for everyone. And then, by April of 2011, less than 2 years later, silver hit 49.80 in April of 2011. So it was straight up. Most of that move from the low 40s to almost 50 was all short covering. So it was a very spike orientated move. This move is quite different. You've got fundamental buyers that are actually buying silver because they're waking up to the needs of silver, with the U.S. government now calling silver critical, or, I think just the institutions, I think everyone's now saying, hey, look, silver is an unloved or misunderstood metal. And people are waking up to the fact that, we need silver for every day, for everything we do in our daily lives. And it's a critical metal. And we need it in our lifetime. And it's great to see that people, I've been talking about silver for 20 years, been pounding the pavement for 20 years. And it's nice to see some of the podcasts I'm listening to these days that, people are, finally realizing that silver is such a critical metal. I still think it's going to be a few years. I don't think we're going to see $100 silver, in the next 6 months, or at least I hope we don't. If we did, that could be an issue. But it has been a slow process. If you compare this move to what I just mentioned, 09 to 2011, that was a very spiky. 2010, silver went straight up, and then it obviously peaked in early 2011. But this move has been more sustainable. You've got fundamental buyers coming into the market. This is not a short cover rally. This is a real solid bull market, and the move's quite different.
Why would it be an issue or a problem if silver were to, say, go to $100 in 2026?
Well, I just hate things going straight up, because, been, being a trader for, 35 years. I just, I like markets to be stable, and I like markets to kind of retrace and go higher, retrace, go higher, higher lows, higher highs, and, create proper, sustainable long-term markets. And I think we're seeing that in the silver space. If you go back 2 years and look at the chart, it's pretty strong. There's a huge fundamental bid behind the metal right now, which is really good to see. So, if you did see this, parabolic spike, parabolic spikes aren't good in any market. It doesn't matter if it's silver or any stock. It's all the same. People say, if we go into a recession or something, or, world economy somehow cracks, and that could impact silver. But, usually an environment like that is good for gold. And then there is a huge bid in gold right now from the central banks and investors around the world. So, gold is very supportive to the silver price. So I don't know if we did go into a recession. I'm not sure if we really would have an impact on silver prices. We do know that, with the electrification and with the, AI and all the things that we want to do, with technology going forward, chip manufacturing and everything else, all these things require silver. So the demand for the metal is not going to go anywhere. Even if we did get into a recession, well, everything's going to stop in AI. I highly doubt it. So, you could have dips and valleys along the way, but, at the end of the day, we're in deficits. We've been in multiple deficits for 5 years now. Those deficits don't appear to be changing in any way. So it'll be very interesting because the miners, have to obviously produce more metal to fill that deficit, and the miners just can't do it at these current prices. You talk about $50 silver, it's still not enough to motivate the mining sector to make the necessary investments. Well, that's the magic question. We have to wake up every morning, keep seeing green on our screen, but it sure looks like it's going there, and it looks like it's going to go through 50. That would be my guess. I don't see anything. Of course, $50 is a psychological number. Anytime you run up against one of these even numbers, you often have people coming into the market and think, hey, this is a nice number to short silver at, I suppose, right? And so maybe you have that happen, but who knows?
I actually made a video after chatting with you, where you said that $40 was a psychological level, and I made a video saying that when we pass 40, expect a lot of momentum there, and that essentially has happened. So I thank you for making me look smart there.
Yeah, I think 38 was kind of like my magic number, and once because it hit 38 a couple of times, and it was been a bit of a wall, and getting through there, it's just air. And I think $50 is going to be air because I think it'll slice through it, and who knows where it's going to slow down or go sideways, but we don't have a crystal ball.
MatthewPiepenburg, on the other hand, focuses on the broader macro backdrop, one that he believes is setting the stage for gold's ascent to $5,000 and silver's rise to $50. He emphasizes that the current global debt structure and persistent inflation are incompatible with stable fiat valuations. Central banks, cornered by their own policies, are now forced to choose between inflation and default, both scenarios that benefit precious metals. Piepenburg argues that the gold market isn't entering a rally, it's entering a revaluation phase where systemic trust in currencies and financial institutions begins to fracture. According to him, the world is transitioning toward a tangible value era, where hard assets regain dominance over financial derivatives. As investors lose faith in paper wealth, the rush into gold and silver will accelerate, pushing prices far beyond traditional resistance levels. Piepenburg sees this not as speculation, but as a rational repricing of truth versus illusion, a correction of decades of financial engineering built on unsustainable leverage.
Silver I think is the ultimate opportunity for those that are struggling to try and find a way to protect themselves right now when gold or an ounce of gold feels too expensive. Look, it's up more than 60% this year. We're not at the 1980 or 2011 gold silver ratios of 15 and 32, but there is a clear indication that there's a massive supply deficit in this metal. I mean, you've got open pit restrictions in Mexico, et cetera. But
Yes.
the market cap for silver is like literally it's half of Nvidia, for God's sakes. I think it's a $2 trillion market cap. So there is any even measurable increase in demand for silver will send its price up significantly. And it's certainly, you've got guys like David Bateman buying a lot of silver right now. I don't think it's because they're just speculating. They see an opportunity for massive 5x, 6x, 10x price appreciation, but it's a way to protect themselves in a precious metal that's affordable. And I think the fact that you've seen so many shorts on the otherwise dying COMEX or the LBMA exchange in London, and despite the shorts, silver's knocking at the door of all-time highs. And because of its limited supply and because of its small market cap, I see a massive opportunity for silver. Again, I think it's the most undervalued asset in dollar terms or even priced in gold terms right now. And again, we're seeing huge interest in silver at our desk in Switzerland. It's not by accident. It's not just by desperate speculators. It's by people who see a massive price appreciation, but a precious metal that's actually affordable, especially for the man on the street, which is incredibly important. But I think if you're looking at silver, remember, you've got to have a long-term view. It's not just a speculation asset. It's a monetary metal. You have to hold it with a sense of insurance for dying paper money. And just like gold, you don't want to just trade it for a 2x return. You've got to be patient, as Rick Wool said. Silver rewards infrequently but extravagantly, and silver's position right now for some fantastic return. The gold price has been knocking from 1,600 to 2,200 to 2,500 to 2,800 to 35. It's slowly, then all at once. It'll be particularly the case for silver, which is like that little speedboat next to the juggernaut that is gold. When gold is hitting all-time highs and when gold is in a bull market, silver tends to dramatically outpace in terms of its speed of movement. I don't think gold's even in its bull market yet. We're clearly at a turning point, but gold is just in the first or second chapter. And I think the reason silver hasn't fully caught up, other than the mechanizations on the COMEX, et cetera, which is disintegrating, one of the reasons silver hasn't really seen that compression of the gold-silver ratio is because really the gold bull market is just beginning. And as it gets more traction, as it becomes more obvious, then I think silver, in terms of just pure price appreciation, is going to be a massive move. Well, right now, it's still clearly driven by central bank demand, especially in the West. And even Western central banks aren't really fully catching on. I was listening to a conference the other day with some Western central bankers in Europe, and former central bankers and former ECB officials, which just literally speak from a playbook. It's almost appalling. They're still seeing gold kind of as, a misunderstood asset. They're ignoring what the other banks of the world, especially the Eastern central banks, who have a long history of being used to being the dog wagged by the tail of Western policymakers who've been exporting their inflation and their world reserve currency around the world to the detriment of everyone. That's the famous John Perkins' book, The Confessions of an Economic Hitman. This exported inflation, this weaponized currency, which no one trusts, post 2022. Central banks have been quietly stacking gold since 2014. That increased dramatically after 2022 when we weaponized the world reserve currency against the advice of Robert Triffin and others. But now they're accelerating this. There's always been a distrust. I mean, you don't have to like China or Russia. You don't have to like the sanctions. You can like the sanctions. You can have your own views on Putin. But when we weaponize the neutral reserve asset, like the world reserve currency, trust in that already unloved U.S. Treasury and U.S. dollar increased exponentially. So the rise of the BRICS and the policies from the BRICS increased exponentially. The amount of net settling done outside of the dollar, the petrodollar, et cetera, that all increased at a rapid pace after 2022, as did gold stacking, tripled by central banks after 2022. That wasn't a coincidence. The jig was up. We'd gone too far with that. And so now the central banks in general, to answer your question, are by far the biggest buyers. It's kind of funny. I heard who was it, Peter Schiff, the central banks see the writing on the wall because they literally created the wall. So they know that the currency is being debased by other central banks, certainly by the Fed. They know that we're in a debt corner. They know there's nowhere to go but down for fiat money. So the central banks, the very criminals who created this situation, especially now, are the first to be buying it, especially in the East. What's ironic is the UK and the US, the biggest sinners, are the slowest to the table. They're still trying to play the game that they have the power with this dollar. And we should talk about people who believe in a strong dollar who make a case for it. The writing is on the wall. This fiat money is part of history. It is being debased at an accelerated pace. It's sad to me that more retail investors aren't catching on, mostly because for decades they've been told by their registered investment advisors and their bankers at Goldman Sachs or Morgan Stanley or the smaller banks. They've all been ignoring gold, saying gold was too volatile an asset, even though it's outperformed the S&P for the last 25 years.
Looking ahead, the trajectory of the precious metals market seems poised for a historic transformation that will redefine global wealth structures. As financial systems strain under unsustainable debt and monetary expansion, the world is quietly moving toward a hard asset standard, one built not on promises, but on intrinsic value. Gold and silver are set to reclaim their roles as the anchors of trust in a collapsing fiat environment. In this emerging landscape, gold's rise to $5,000 and silver's surge past $50 won't just reflect investor sentiment. They'll symbolize the end of the dollar-dominant era and the beginning of a multipolar system where tangible assets underpin real power. Supply constraints, geopolitical realignments, and central bank accumulation will all converge into a perfect storm that forces a structural repricing of both metals. One of the greatest wealth redistributions in modern history. The coming years won't just test the strength of markets, they'll test the very definition of money itself. Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.